The chipmaker that's fueling CoreWeave's rise might be planning its own server rental business in the near future. With $35 billion in quarterly data center revenue and its own cloud platform, DGX, Nvidia could really shift from supplier to direct competitor, potentially controlling the GPUs CoreWeave depends on. The competitive landscape is also crowded. You got hyperscalers, AWS in there, smaller players like Lambda Labs also in the space. And then you have CoreWeave's financial picture, which is quite precarious. They're projecting $15 billion in cash burn for 2025, carrying $7.9 billion in debt, $15 billion in lease obligations, and their prospectus, which was very interesting, candidly warns about substantial debt, much of it actually collateralized by GPUs. So those GPU assets typically have about a 3 to 5 year life cycle, or shelf life, I should say, and they face accelerated depreciation as Nvidia continually releases new chips every single year. So you keep buying it 1 year, and then the next year you realize, oh, this might be obsolete, so the value decreases. The IPO will show if CoreWeave's AI compute empire can really outmaneuver Nvidia's growing influence, hyperscaler competition, and of course, its own financial constraints, guys.
But I'm not quite ready to give in to the overall pessimism that I feel kind of brewing about the AI trade, about IPOs. I don't think this IPO doesn't sound like it's going to do well.
You're looking to buy more Nvidia,
right?
You are, but that stock can't get out of its own way.
But at the same time,
for all the reasons that we just discussed,
I got it, and those are to me more technical reasons. When I look at the fundamental reasons, and of course I'm looking at you, Josh. You know, I see a stock that's trading at 24 times forward earnings. And I really don't question that much the 50% earnings per share growth that we're looking at this year.
You think that Nvidia has been trading lower for technical reasons? It's been all about fundamentals, and it's been one thing after another.
Okay, when I was saying technicals, I meant the technicals of this week just being up, down, tariffs, and who knows what's coming out of Washington. Regarding the fundamentals, I actually think the fundamentals are very much stronger. I don't think DeepSeek is some death knell here. It moves them from large language learning model training to inference, where they probably are going to do pretty well.
Here's the risk on NVIDIA, and I'm long.
This is like the godfather of NVIDIA.
Okay,
I'm looking at him.
I'm long. I'm not negative on NVIDIA long term. I'm telling you what I think the risk is right now. This is the part people don't understand. Last summer, a press release went out from Blackstone gloriously announcing this massive infrastructure investment that they were making. And this is where the money comes from. When you hear the breathless reports that CoreWeave has acquired 300,000 GPUs, where the hell do you think they got the money to do that? They're getting the money from these huge pots of wealth management capital that's going into AI infrastructure funds. And Blackstone's not alone. Everybody has one. It's the hottest product for people in my seat to be selling to their clients. It's billions and billions of dollars in debt financing so that CoreWeave can buy all this NVIDIA product. That's great. Here's the rub. If for whatever reason the demand doesn't materialize fast enough to please the investors, then all of a sudden there's less money for the next AI infrastructure fund and the next one and the next one. And all of a sudden CoreWeave doesn't have the capital to buy more GPUs, which is where NVIDIA really, at the end of the caboose of that long train I've described, that's where they finally come out and say, turns out we may not have much more demand for the next version after Blackwell as we thought we did. Everything's still great, but it's a little bit of a dial down. How do you think Wall Street's going to take that? Calmly?
Disastrously.
Well, and here's the thing. NVIDIA is going to be right with their vision of where AI is going, in the same way that all the companies laying broadband and fiber were right 25 years ago. The timing. All that fiber was worthless until YouTube came along in 2005. It took a long time to find a use for all that dark fiber.
CoreWeave said Thursday night that it had raised $1.5 billion by selling 37.5 million shares at a price of $40 a share, which was lower than its previous midpoint estimate of $51. The artificial intelligence infrastructure company is valued at an estimated $20 billion as a result of the offering. A total of 36.59 million newly issued Class A ordinary shares and 910,000 shares sold by existing shareholders make up the offer. Within 30 days, underwriters are also permitted to purchase an additional 5.63 million shares. The shares with the ticker code CRWV will begin trading on the NASDAQ on Friday. The offering is expected to conclude on March 31st under normal closing conditions. A prior filing by the U.S. Securities and Exchange Commission states that CoreWeave initially aimed to raise up to $2.4 billion at the $51 midpoint price through a larger offering of 47 million shares. It is projected that Nvidia, an early CoreWeave investor, will purchase $250 million worth of shares at the IPO price. The chipmaker owns 6% of the company. CoreWeave reported $1.92 billion in sales for 2024, a 700% increase over the previous year, but also reported a net loss of $863 million. According to a regulatory filing, Microsoft will account for 62% of the company's 2024 revenue. The company had more than 250,000 graphics processing units spread across 32 data centers by the end of 2024. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Opportunities, right? And what's interesting to me is NVIDIA is a name that you say now, hey, look, where it is now is really compelling. You list the market leadership, its valuation, and, of course, the growth trajectory. The growth trajectory is the one, I guess, on Wall Street, there's still a lot of folks who don't believe in that growth trajectory.
Listen, you cannot believe in it if you want. All you have to do is turn around and look at the way AI is changing the world, right? Like I said to somebody yesterday, I had this conversation. Has anyone here used Grok? Grok is unbelievable, right? But when you think about the way that AI is going to change the world, and NVIDIA sits right at the nexus of it all. Look what they did to AMD today. They downgraded AMD because of the NVIDIA challenge, right? And so I think at this point, I don't know how you argue against it. Right. And the fact is it is on sale.
You have a couple of stock picks, one value, one growth. You like NVIDIA, you like Target. NVIDIA immediately takes my mind to this CoreWeave IPO, which, well, I mean, what is that? Look at Jefferies down 10% today. You know, this was supposed to be the year of deal making, and all the investment bank stocks ran up big time last year. And it does now feel like we're in a little bit of a holding pattern.
It is, but I don't think we're in one in NVIDIA. I mean, when you think about it, NVIDIA is still the leader in the AI chip space. And I think the AI chip space and the AI space in general is still very much in its infancy. So if you have an industry in its infancy that's not really affected by tariffs, that is going to continue to grow. And by the way, I think NVIDIA laid out, a great roadmap of growth at their GTC conference last week. So there's a lot of industry growth. NVIDIA is a clear leader. Their Blackwell chip is much more robust and efficient than anything the competitors have, including DeepSeek. So I think this is an opportunity. And you know what? In NVIDIA, the argument has always been it's too expensive. Well, it's not anymore. If you look out to 2026 earnings there, it's 20 times. So it's cheap now, too. You can get an industry leader in an industry that's going to grow for years at a cheap price.
Folks, NVIDIA is really, really breaking down, and it looks more vulnerable than ever. But my next guest says this is when you want to buy it. Art Hogan is here. Art here, by the way, was at the time on Wall Street during the original tech bubble. And if he says NVIDIA is a buy, you want to find out why. You will right after this. The launch of ChatGPT, November 30th, 2022, instantly made NVIDIA the most important company in the fourth industrial revolution. You can see the stock right here. It just took off and took off and took off and took off and kept taking off. And of course, as that was taking off, the stock market took off. Well, these days, of course, we know NVIDIA is beginning to struggle here. It's under some key moving averages. And of course, as NVIDIA struggles, the overall stock market struggles. And even now, after proving the detractors wrong repeatedly, NVIDIA now, unfortunately, is starting to look like a prize fighter who won most of their fights, but along the process developed a glass straw. Think about this. Yesterday, this is great news. OpenAI, the stock going to triple the revenue to almost $13 billion. Normally, that would have sent NVIDIA shares exploding higher. But this headline was superseded by another headline. This from the Financial Times out of China, saying that maybe China would stop letting NVIDIA send in the older chips because of environmental reasons. Now, this is just a ploy. They really want them them to send in the better chips, but they're prohibited from doing that. So let's just say this went through and they lost $17 billion. Sounds like a lot of money. However, how much is NVIDIA looking to earn this year? 196 billion, take 17 billion from that. Next year, 246 billion, okay, take 17 billion from that. 2027, $238 billion again. So subtract $17 billion from these numbers. Should the company have lost $170 billion in valuation just yesterday alone? Now, I know there are other stories out there swirling around. The stock cannot get up. It cannot get any sort of traction. Well, my next guest says the stock is a buy. So the question, though, is if it's a buy, what's going to spark that Rocky Balboa rebound? Let's bring in B. Riley Wealth Management, their chief market strategist, Art Hogan. Art, I mean, you like this. You also like some other beaten down techs, but let's talk about NVIDIA specifically because this is the one that sets the tone.
It certainly does, and I think all the points that you brought up are correct, right? And it just showing the 3-year CAGR of revenue growth is amazing for a stock that's now trading at 35 times. It's got gross margins close to 72% this year estimated, and it certainly feels as though a PEG ratio of 0.6 has gotten very overdone. The problem, Charles, is, as you know, when portfolio managers are de-risking their portfolios, they're certainly looking at tech, and tech is down, the Max 7 down anywhere between 15 and 20% over the course of the last 4 weeks. Nvidia is the tip of the spear in that move down. And unless and until we get to a place where it feels as though some of the uncertainty around trade policy settles down, it's going to be difficult not to see this rotation that we've seen, this massive rotation out of tech and into things that are much more defensive, like energy staples and
CoreWeave faces out against major rivals like Amazon and Alphabet's Google in the hyperscale AI cloud infrastructure market. The cutting-edge semiconductors that enable AI tools have been a key component of the rapidly expanding artificial intelligence (AI) business. Since its processors predominate in AI data centers, NVIDIA has attracted the greatest attention in this field. With an estimated 70% to 95% of the market for AI accelerators, NVIDIA has achieved remarkable financial success. Due to the demand from tech businesses to install NVIDIA's chips in their data centers, NVIDIA's sales increased 385% between fiscal 2023 and fiscal 2025, hitting $130.5 billion. That has been the driving force behind NVIDIA's share price rising 438% in the last 2 years. Although it is not realistic to expect the company's stock to see such increases in the next years, it may still generate significant returns. It's crucial to note that AI is still in its infancy in order to comprehend why. Even though it seems like it has been around for a long, businesses are just now beginning to invest in AI infrastructure. Businesses aren't slowing down. They have already invested hundreds of billions of dollars in AI data centers. According to Jensen Huang, CEO of NVIDIA, annual spending may reach $2 trillion by 2030. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now let's dive into today's video.
The one at the blast center, right where you most felt it today, NVIDIA. Hence this nearly 6% decline. We spent a lot of time in NVIDIA last week. Right now, people don't like the stock of NVIDIA. Now, we can go over all of these, and I can tell you that many people believe the data center story is done after rumored canceling of some data center builds by Microsoft. But given how intertwined Microsoft is with an alpha called OpenAI that we talked to last week, that's the alpha behind ChatGPT, I think it's possible Microsoft's cancellation may simply mean that they're making OpenAI pay for its own computing power. I bet the data center build-out continues apace, but very few people believe right now, in my view. We're at a curious moment here where any reassurances that the industrial revolution of AI is still on just won't cut it. Every single stock in the sector is being mauled by the bears. NVIDIA is being torn to pieces. So let's go to the epicenter of the blast zone, because that's what I like to do. I want you to put your containment suit on first, though. Make sure you have a Geiger counter with you, because NVIDIA is being subject to nothing less than a nuclear bear attack, and the radiation burns are scaring shareholders as they question what the heck they're in this one for. Let's start with the White House. There have been a feeling among executives that the strictures put on by President Biden against NVIDIA when he did it right on the way out ones that limited the countries that NVIDIA could sell its best chips to, they might be lifted by President Trump. Now, all day I'm hearing that that's wrong, that Trump actually may even go harder against NVIDIA, and that alone could be a reason to sell the stock. But there's more. This morning, the Financial Times penned a story saying that NVIDIA's chips somehow ran afoul of Chinese pollution controls. Given that China puts up 2 coal plants a week, I was astonished to hear that they could care about the pollution at all from NVIDIA. It sounded like the typical journalist hit job against NVIDIA that keeps popping up. Nevertheless, along with the rumored White House slap down, well, you could expect the stock to get hit. I know some of you don't care about the technicals, but you know what? There are enough people who do that. I'm going to bring it up. NVIDIA's death cross formation happened about a week ago. That's where the 50-day moving average plunges below the 200-day moving average, and it's widely seen as a terrifying development. Sell. Why does this matter? Because this stock is the subject of a tremendous amount of technical pressure. There are multiple inverse NVDA ETFs. That's bets against the stock. There are also huge bets being placed all day against NVIDIA in what's known as the zero-day options market. That's where traders can make a one-day bet against NVIDIA, and boy, are they ever doing that. How does it work? You buy a put option on the stock. The customer on the other side isn't interested in making that making a long bet, which is what they have to do. So what do? They have to go in and short the stock. The people who do these trades aren't all that savvy about NVIDIA, but they're savvy about the death cross, which makes it a bit of a self-fulfilling bear raid. Sell.
The house of pain.
So what do you do if you own NVIDIA? Well, look, if I were back in my old hedge fund, I'd ask myself, why the heck did I buy this thing in the first place? The answer is that I believe in the new AI-powered industrial revolution, where everything tech has to be remade with NVIDIA's GPUs, allowing autonomous vehicles and robots to eventually rule the world. I haven't changed my stance. However, I don't believe in self-flagellation. I see the stock coming down from here. I've been saying that. It's become a whipping boy. I've been saying that. It will only get worse with tonight's tariffs. Believe me. It's okay to believe in the stock, but understand that right now it's not right. Down here at less than 25 times this year's earnings estimates, though, I think NVIDIA is cheap, but I don't think it's done going down because the bears can plan stories about it, and as long as it goes down after the bears plan stories, that means the stock is in the wrong hands. So how do I describe it? I think the stock trades like a wavy, inflatable tube man, also known as an air dancer. Not exactly the Statue of Liberty. My advice, if you think NVIDIA is cheap and the data center, the chief home of NVIDIA's chips is spent, well, then what? There's nothing wrong with owning a tube man, except when you see a move south like this, you have to give it some room. You have to let it come down. Okay, those tube men, you know that? It's like, used car. That's what NVIDIA feels like right now. All right, now, one day we're going to get some certainty on NVIDIA. And if we can get that certainty, we also know what's happening with a whole host of other stocks. They'll all stop going down. A Marvell Tech, a Broadcom, GE Vernova, Vistra. But the bottom line, NVIDIA is the linchpin of this group, and the pin is failing. I don't know whether the stock plunges from here. But if you like it enough to keep owning it, I say prepare for the tube man turbo.
Although IT businesses constantly invest heavily in new technologies, NVIDIA already benefits from this increase in spending, and spending on AI may be unlike anything else in the past. According to PwC, AI may boost GDP by $15.7 trillion in just 5 years, and IT corporations are afraid about falling behind. Think about how some tech businesses have discussed economic concerns in their most recent earnings calls without reducing their investments in AI technology. They are aware that losing the AI race is not an option. It's difficult to imagine NVIDIA not profiting from AI's ascent in the upcoming years given its leading position in AI processors. For the next few years, investing in high-end processors, which NVIDIA designs, is probably the wisest course of action for IT businesses because artificial intelligence is just too crucial to try to execute on a shoestring. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Kevin Green going to look at some charts for us and a couple stocks too. KG, that economic bear case from Barry there is certainly not invigorating anyone to buy stocks who's listening, I don't think. If they think he's right on some of that stuff, especially the next jobs print being weak. Bonds really rallying this morning.
Yeah, and this is going to be a little bit of a difficult market here, Oliver, because obviously that PCE print came in a little bit hotter than expected, and he's right. I mean, we haven't had any March data yet, and once we start getting that data, how much is the street really going to weigh on that for now? But from a technical standpoint for the S&P 500, we are at the lows that we saw actually on Wednesday of actually yesterday, the open of yesterday here. So you want to see some buyers kind of stepping in. I have a very wide range, and unfortunately, this is just how the positioning is. This is not a guessing game here. So 5,700 to the upside here is going to be your first area of potential resistance. To the downside, Oliver, I have 5,600. You're talking about 100 points to the downside that's being kind of priced in or layered into today. To the upside, you're looking at 5,750 as your area of resistance. Once again, these are just based on the volume flows alone. Nothing of the technicals or guessing here. It's just a wide market. Wide market today probably signifies that we will have some volatility. A couple of questions that you have kind of going into this. How much do we trade the news flow? That's where we saw a little bit of a bump over the last 20 minutes or so, that Bloomberg report around the EU, potentially EU concessions around autos. We saw a little bit of a bump here, but that PCE number, once again, was a little bit bearish. So how does the market really try to navigate through some of these waters here? And if we do get some updates from the White House, maybe they're open to these EU concessions, maybe they're not. I think that's going to really drive price here. So expect a little bit more volatility today, both to the upside or downside. And be very tactical when it comes to the positioning today. I think it's going to be a pretty wild ride.
All right. Well, if bulls can push through this, then it would be very impressive because the cards are kind of stacked against us right now with also the bid into gold, the move down in BTC. I mean, look, we're 60 bips. So, for the NASDAQ, it's not like the move is big. There's still plenty of opportunity here for sure, but you really have to stick your neck out, basically. This is the part of the, it's not a rally. This is the part of the bounce that we've been in that's like brass tacks. If people don't show up today and we get below 5,700 meaningfully, it feels like then anything's possible, including the recent lows.
I would agree to that to a point. Once again, we're still actually kind of testing this gap that we made from last week to this week.
That's what I'm saying. If we get through there, then it feels like all our progress is kind of lost. I know there's still a couple hundred points below, but.
Yeah, I think if you actually get from a technical standpoint, if we kind of look at the daily chart, if you actually break through 5,600, that's when you would say all things are lost, because you could go back into that range that we saw last week, that compression. And if that's going to be the case, we battle it out there, we kind of move higher, then that also states that maybe we have some bulls that actually find value at that particular level, which I think is going to be key. A break below 5,600, I think that's where you get really concerned that we start to kind of move to the downside. That would also kind of break this bear flag pattern that we have on the S&P 500, basically a counter trend rally to the upside here. But the primary trend over the last 2 months, 2.5 months or so, has been to the downside. So I wouldn't say all is lost right now. There's still a lot to go when it comes to today's trading session, as well as for next week. But we're kind of in no man's land. I would say the bears kind of have the edge for now, basically defending a lot of these moving averages, trying to test that gap. But 5,600 is going to be that key. And I don't know, what will also be interesting. So did we see some new short sellers kind of getting into the market? That could be the case. Do they also want to carry over risk over the weekend? Is that going to be the case, right? Which could also then fuel like a short covering rally going into the close because you don't know what's going to happen? Or do you have bulls that say, hey, I don't want to hold long over the weekend? That's where we're going to kind of see what the deciding factor here is for now. But once again, I say that we have a pretty wide range here for today's trading session, and we'll see how everything kind of pans out.
Yeah. Okay, we need to stay in the gap at least, and preferably push back out of it into Monday's levels. Dollar trying to find some support in the high 103s too. So that maybe helps. Bonds kind of cooled off a little bit there, but just a momentary breather very well could be. International markets are down 40 bips. EFA down 40. FXI is down 1.5%. Kind of interesting that the other stuff's not catching a bid. More technicals, or you want to talk some stocks, KG? to you.
Let's do some technicals here real quick, and we could talk about the stocks. Let's bring up that 15-minute chart one more time. So once again, we saw some buyers kind of stepping in here. This 15-minute candle is going to be key. It's going to close off in about another 8 minutes or so. If you're watching this in real time, if we can have a hammer, a green hammer candle there at those lows that once again we're kind of defending from yesterday, that would be key. You probably will see some buyers kind of stepping in. So once again, a lot of volatility kind of taking place right now when it comes to the market. The other chart I wanted to kind of highlight here before we start talking about the stocks, 10-year minus 3-month treasury spread, something that probably we haven't talked about in a very long time. I know I haven't, but keep your eye out on that. Actually, it's a pretty decent indicator of what's happening right now. We did have this nice little move to the upside when it comes to that spread, but you're starting to see that spread kind of coming in. And last year, obviously, we had a negative spread there. But notice the technical trend that we're seeing there. Once again, moving to the downside, bear flag to the upside. What are you seeing for the S&P 500, which is in white? Same type of reaction. Sure. This is going to be the spread that we probably need to keep our eye out on a little bit more and probably get even granular when it comes to even a daily, or when it comes to maybe even a 15-minute chart or a 5-minute chart to kind of give us a little bit of a direction as, hey, where does the market really want to go right now? Because it does not want to go back into this negative spread regime. Totally. We can kind of see that with the S&P 500. Like they're kind of lowering the bar here a little bit, trying to raise some capital. There's a report from Reuters that Nvidia is going to be backstopping at least $250 million worth of shares when the IPO opens. So they'll have some pricing, stabilization there for the most part. And I would just say, look for some volatility when it comes to that IPO. And if you are trading it, I wouldn't use market orders personally because the spreads might not be that great. And usually IPOs, I'm not saying this is going to happen with CoreWeave, but usually IPOs, you see a decent little pop when they start off. And then over the next 2 or 3 months, usually they see some downside pressure. Once again, not saying that that's going to happen to CoreWeave, but if you're going to trade it, be very nimble with it and be understanding that the intraday vol is going to be pretty hectic, to say the least here, Oliver. So we'll keep our eye on it. But once again, I think it's more showing the IPO market might be softening a little bit more than what we probably expected at the start of the year.
Yeah. All right.